Hey everyone, in this video I'm going to answer if Deere and Company stock is a buy. I'm going to use my simplified 6-step framework for analysis and you'll have your answer by the end of the video, so stay tuned. The first step in my framework looks at customer value, and one way I measure that is through revenue. Uh, and for Deere, revenue has grown from 37.6 billion in 2013 all the way up to 52.6 billion in 22. Obviously, it's doing something that the customers find appealing. Otherwise, they wouldn't be buying over $50 billion of its equipment. And most of you all are familiar with Deere's equipment, earth moving equipment used by farmers, construction companies, forestry companies. They also sell lawnmowers and they have a financing arm. They've been around for over 180 years. Another thing I like to look at is the Net Promoter Score, and Deere boasts a score of -9. And if we look at the scale here, it needs improvement in that regard. Of course, the NPS score measures customer loyalty, so Deere needs to improve this if it wants to maintain that customer loyalty. It has spent centuries cultivating. The next step in my framework looks at unit economics, and its gross profit margin has averaged 28.3% over the last decade and has remained relatively stable. It recently instituted some major price increases, so gross profit margin might look a little bit better going forward over the next several years if it can outpace inflationary cost pressure. Meanwhile, its operating profit margin has rose from 14.5% to 17.4% in that time. So it's been able to scale its expenses below the cost of goods sold to increase profitability, even though its gross profit margin has stayed relatively flat. The next step in my framework looks at the total addressable market, and it has an estimated market opportunity across its various business segments of $450 billion. Some estimates say that it could be much larger than that. Competition, of course, Caterpillar is its primary competitor as well as others in the lawn and garden category. But the strong industry demand for farmers and construction firms have created a backlog of orders for earth moving equipment, allowing participants to raise prices, like I mentioned earlier, without fearing losing market share. And the next step in my framework looks at valuation. For this company, Deere and Company, I use the price to earnings ratio and a PE of 18.56. If we look back, going back all the way before 2014, it's fairly priced. I would say there was moments where the stock was more expensive. It spiked higher in a few moments, but there have also been a lot of moments that it was priced much lower. In fact, before in the years before 2016, it didn't achieve a price to earnings ratio above 16 in that entire time. So I can't say the stock is expensive and I can't say the stock is cheap. I would say it's fairly priced. And the final step in my framework looks at risks. The primary risk I note here is supply chain disruptions could hamper its ability to meet robust customer demand. I mentioned earlier, Deere has a backlog of orders. If it can't secure supplies of the products it needs to make these things to deliver, then that could be a major risk. Of course, it can secure supplies if it's willing to pay very high prices, but then that's going to hurt its profit margins. So the key here is for them to be able to secure enough of the materials and equipment it needs to deliver on this robust customer demand in time before customers cancel and switch to competitors. So that's the major risk right now for Deere. So now that I've looked at each step in the framework, let me give it a grade. Customer value, they get an A, over 50 billion in revenue and nearly 2 centuries of history serving customers. So clearly they're offering something that customers like. They're offering a great customer value proposition. They get an A in this regard, even though their NPS score needed improvement. Unit economics, they got a B plus, solid margins and growing operating profit margin. Total addressable market, they have a large opportunity. They get an A minus there. Competition, they get an A here because it's a excellent time for competitive forces that are very, very low. So that's an excellent time for investors, an excellent industry to invest in when competition is not as fierce, when customer demand far outpaces supplies in the industry. This is good for investors. Risks, I note here an A. It's a great risk to have where customer demand is so high that your risk is not being able to supply your super high customer demand. So that's a great position to be in. I gave it an A in that regard. And finally, valuation. We recall we said that they were trading at a fair value, so they get a B in this regard. All right, on the next slide, I'm going to answer, is Deere & Company stock a buy? Deere stock is a buy right now. It's got an excellent business model delivering solid profit margins with a backlog of customer orders, trading at a fair valuation. This is a good time for investors to buy Deere stock. All right, thank you for watching. That's all I've got, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.